Hello traders, Rich here, and here's a quick but detailed update on EURUSD. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, EURUSD has been overall bearish for a while, and we previously broke below this low, rejected the one round number, and we are currently retesting this previous low, acting as a potential resistance zone. So that's why we're expecting a continuation from here, unless of course the bulls take over by breaking above it with an aggressive momentum candle. But for now, I'm still speculating a short-term bearish movement. If you zoom into H4 time frame, you can see that we have been bullish, of course, after breaking above this falling channel. We have been bullish, and we are lately trading inside this rising channel impulse correction, and we are currently inside this next impulse movement, approaching the upper bound of this channel, acting as a non-horizontal resistance. So I'm personally speculating a correction movement, and then of course we'll be looking for trend following buy setups around the lower band. But for now, let's take it step by step. Approaching this area, let's zoom into lower time frames and look for sell setups. If you zoom into H1, we can see that we have a channel in orange, and this is our last current low. So for the bears to take over, we need to see a break below it. Meanwhile, as mentioned previously, EURUSD would be bullish and we can still trade higher, dive inside this resistance and the upper, or till the upper trend line, and then form a new low maybe, and then before we break it downward. So long story short, approaching a resistance, I'm looking for some setups, waiting for the bears to prove to me that they are strong enough to take over and start this correction movement. Of course, when we break it downward, entry would be here, stop us above the previous high, and we target a 1 to 2 risk to reward ratio, which would be around the lower band, where we'll be looking for buy setups. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, NZDCHF has been overall bearish for a while, making low lows and lower highs, and it's currently inside a correction movement approaching resistance zone. That's why we'll be looking for trend following sell setups, of course, unless this resistance is broken upward. In this case, we'll be expecting a deeper correction till around the upper brown trend line, which is also lining up with the supply zone, where we'll be looking for sell setups, and of course buy setups here on lower time frames. But for now, let's take it step by step, approaching a resistance, overall bearish. So let's zoom into lower time frames and look for sell setups. If you zoom into H4 time frame, if you remember, I've posted this one that's right around the resistance. We are looking for sell setups because it's also lining up with this upper trend line of this rising broadening wedge. For now, if you zoom into lower time frames, the bears already took over by breaking below this low, and we've got another opportunity here, which would be the head and shoulders pattern, as you clearly see. So I'm waiting for the right shoulder to form and then a break below the neckline, covering the entire structure. In this case, I'll be selling into this HF after this break. The stop loss would be above the previous swing high, which is in this case the right shoulder, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, which would be around the lower bound of this rising broadening wedge. Meanwhile, as mentioned previously, from daily and weekly, we would be bullish, of course, and we can still trade higher. We'll be looking for some setups around the upper bound again. Best of luck, and I'll see you hopefully on the next